Hey everyone, welcome back. If you're here, you're not looking for hopium, you're looking for real analysis backed by data, charts, and a bit of healthy skepticism. Before we dissect SEI's potential rocket ride to $3, do me a favor, hit that like button, subscribe if you haven't already, and turn on notifications. The next few weeks could get wild and you don't want to miss it. Alright, let's dive in. SEI is trading at 19 cents right now, sitting quietly while massive moves happen behind the scenes. And when I say massive, I mean the kind that changes narratives overnight. Morpho Labs just went live on SEI, bringing their $12 billion in deposits along for the ride. These guys power enterprise lending features for Coinbase's crypto-backed loans. That's not some DeFi degen protocol, that's institutional-grade infrastructure, choosing SEI as their home. When platforms handling billions pick your blockchain, it's a stamp of approval you can't buy. Then, Hamilton Lane drops their tokenized scope fund on SEI through KAIO. Hamilton Lane manages $986 billion in assets. Let me repeat that. Nearly $1 trillion in traditional finance now has a bridge into SEI's ecosystem. They're following BlackRock and Brevan Howard, who already launched tokenized funds on the network. This isn't retail speculation, this is Wall Street quietly entering the building. Now, while this institutional adoption unfolds, analyst Bitcoin Census spots something juicy on the charts. SEI has been consolidating inside a falling wedge pattern on the weekly time frame. For those who don't speak chart, falling wedges are like watching a dam fill up before it bursts. Price compresses, volume dries up, then boom, breakout. The setup resembles a macro bull flag, which typically shows up during strong uptrends right before the next explosive leg. According to Bitcoin Census, SEI is fundamentally strong but technically undervalued. So, translation. The project is solid, but the market hasn't caught on yet. And that's exactly where fortunes get made. But before you rush to market buy, let's pump the brakes and look at what's actually happening right now. SEI ranks 100th globally with a $1.21 billion market cap. Daily trading volume sits at 163 million, which is decent, but not exactly screaming mania mode. The market is calm, maybe too calm. The Bollinger Bands paint an interesting picture. SEI is hugging the lower band at 17.43 cents, squeezed between support and the basis line at 25.47 cents. When price hugs the lower band like this, it typically means one of two things. Either we're bottoming out and about to bounce, or we're about to break down further. The market loves keeping us guessing. The RSI is sitting at 30.09, firmly in oversold territory. The RSI-based moving average reads 37.08, confirming we're deep in undervalued conditions from a momentum perspective. Now here's the thing, oversold can stay oversold longer than your portfolio can stay solvent. Just because something's cheap doesn't mean it can't get cheaper. Bitcoin Census identifies two critical breakout zones labeled Breakout 1 and Breakout 2. These aren't suggestions. They're requirements. Until SEI validates these levels with volume and conviction, we're stuck in consolidation purgatory. The analyst notes that short-term sideways action may persist, which is code for be patient or get chopped up by volatility. And here's my take. Falling wedges have about a 75% success rate in crypto bull markets. That's pretty good, but it's not guaranteed. I've seen perfect wedge setups fail spectacularly when Bitcoin dumps or macro conditions shift. The pattern is only as good as the market environment it's forming in. Right now, we're in a wait-and-see phase across all risk assets. So, let's talk about what happens if SEI actually breaks out. Bitcoin Census projects a $3 target, which from today's 19-cent price represents a 15 times return. That would launch SEI from 1.21 billion to roughly 18 billion in market cap, pushing it into the top 20 cryptocurrencies globally. Sounds insane. Let's check the receipts. During 2021's bull run, Solana hit 70 billion, Cardano touched 90 billion, and Avalanche crossed 30 billion. These were layer 1 protocols with strong narratives and institutional attention. Exactly what SEI has cooking right now. So yes, $3 is ambitious, but it's not fantasy if conditions align. According to market structure analysis, the current consolidation mirrors pre-rally patterns we've seen across multiple altcoin cycles. When wedge formations compress this tightly, the eventual breakout tends to be violent and fast. The key is volume confirmation. So, my expert opinion? The $3 target isn't a 2025 story, it's a full bull market cycle target. We're talking, 12 to 18 months if everything goes right. The falling wedge breakout could trigger within 4 to 8 weeks. But honestly, reaching $3 requires Bitcoin holding above 70,000, continued institutional adoption, and sustained risk-on sentiment in global markets. The fact that SEI is holding 18-cent support despite weak market conditions really tells me that smart money is accumulating. Institutions, they don't buy when everyone's excited, they buy when retail is scared and prices are compressed. That 163 million in daily volume might look kind of boring, but consistent volume during consolidation beats sporadic pumps any day. TradingView data shows SEI trading at 19.25 cents, barely holding above critical support. The Bollinger Bands are compressed, signaling declining volatility, which historically precedes major moves. When volatility contracts, expansion follows. It's not a matter of if, it's a matter of when and in which direction. If the RSI crosses above its moving average while price breaks above the wedge resistance, we get technical confirmation of a bullish reversal. The critical level to watch is 25 cents. A clean break above that with volume validates the entire setup and opens the door to 35 cents, then 50 cents, and eventually the higher targets Bitcoin census mapped out. The Morpho integration isn't just a partnership announcement, it's a fundamental shift in DeFi infrastructure. Morpho's $12 billion in deposits represents real capital from real users seeking yields. This isn't inflated TVL from vampire attacks or mercenary farmers, it's sticky institutional money with long deployment horizons. Hamilton Lane's tokenized fund is genuinely groundbreaking. Private credit, historically locked behind accredited investor walls, is now accessible on-chain. You can interact with billion-dollar funds using the same wallet you use for memcoins. That composability, that's the future of finance, and SEI is building the rails for it. But here's what nobody's talking about. SEI's success is tied to altcoin season timing. Right now, Bitcoin dominance is elevated, meaning capital isn't flowing into altcoins aggressively. When Bitcoin stabilizes and dominance drops, that's when Layer 1 protocols like SEI explode. Historically, this happens 2 to 4 months after Bitcoin confirms new local highs. The 18-cent support level has been tested multiple times without breaking. In technical analysis, the more time support holds, the stronger it becomes, until it doesn't. That's why stop losses exist. If SEI breaks below 18 cents, the entire bullish thesis gets questioned, and we could see a flush to 15 cents or lower. But assuming support holds, the setup is textbook accumulation. Price consolidates, weak hands sell, strong hands buy, and eventually supply dries up. When demand returns, even small buy pressure creates outsized moves because there's no supply available at these levels. Bottom line, if you're considering SEI, watch that 18-cent support and the 25-cent breakout level. Those are your decision points. Don't buy because a video told you to. Buy because your analysis confirms the thesis. And if you found this breakdown helpful, drop a comment with your SEI price prediction. $3, $1, or back to 10 cents. I want to hear it. Before you go, check out my other videos on altcoins like SEI will run. And hit that subscribe button because we're breaking down the smartest plays in crypto every week. No hype, just data. Final word. Cryptocurrency is high risk and extremely volatile. Never invest money you can't afford to lose completely. This video is educational entertainment, not financial advice. Do your own research, consult professionals, and understand that markets can move against you violently and without warning. Trade smart, manage risk, and I'll catch you in the next one.